Welcome to The Explainer. Today, we are diving straight into the explosive market surge of the Billions Network token, better known as BIL. We're going to completely decode the fascinating zero-knowledge identity tech that's driving all this hype right now. So let's jump right in.
Here's our roadmap for today. First, the BIL market explosion. Second, fixing the AI bot problem. Third, how Billions Network actually works. Fourth, price drivers and catalysts. And finally, the real risks for traders. Section 1. The BIL market explosion. A simultaneous launch and a massive surge. Imagine checking the charts and seeing a token jump 43% in a single 24-hour period. Well, that's exactly what happened with BIL on one wild Wednesday this past May, as it traded right up near the 8-cent region. And it wasn't a slow, quiet build either. This followed a highly coordinated launch across 6 major exchanges all at once, including heavyweights like KuCoin, Bybit, and Kraken. That kind of multi-exchange debut is pretty rare and instantly signals some massive institutional backing.
Now the numbers here get a little crazy. Listen to this ratio. The 24-hour trading volume hit a staggering $354 million, which actually outpaced the token's total market cap of $235 million. In crypto, when trading volume beats the market cap like that, it's a flashing neon sign. It tells us we aren't looking at quiet, long-term holding, we're looking at intense, speculative market rotation. People were trading this asset back and forth at a blistering pace.
Section 2. Fixing the AI bot problem. The need for verifiable human identity.
So what's actually fueling all this financial attention? It really comes down to a multi-billion-dollar question. How do you prove you're human without exposing your actual ID? Right now, the internet is absolutely drowning in AI bots and unidentified slop. The digital identity verification market is projected to hit $20 billion by 2028 because we desperately need a way to prove we're real, but without handing over our passports to every single website we visit.
Which brings us to a really interesting matchup, WorldCoin versus Billions Network. You've probably heard of WorldCoin, right? Co-founded by the CEO of OpenAI, they use those physical metallic orbs to scan your irises and tie it to a database. A lot of critics find that approach a bit dystopian. Billions, on the other hand, is leaning hard into a cypherpunk alternative. No iris scanners. They rely purely on mobile-first verification and some incredibly smart zero-knowledge math.
Section 3. How Billions Network works. Zero-knowledge infrastructure and AI agents. To really get this, we have to talk about zero-knowledge proofs. I know, it sounds super academic, but think of it like this. It's like proving to a bouncer that you're over 18 without ever showing them your actual birth date or your home address. It's cryptographic math that proves a fact is 100% true while keeping all the raw data completely hidden from the person verifying it. So how does the network pull this off? It's entirely mobile. First, you just scan your government ID on your phone. Next, you do a quick camera liveness check, basically proving to the system you're a live human and not a deepfake. Boom! The system gives you a cryptographic hash known as a decentralized identifier, or DID. And the absolute best part, your actual personal data is never, ever stored on their servers.
But it goes even deeper than human identity. This network actively integrates a crypto standard, ERC 8004, to assign verifiable, accountable identities to AI agents too. They call it Know Your Agent, or KYA. So when an AI bot is out there making a trade or executing a smart contract, it actually has a reputation layer tied back to a verified creator. It's basically accountability for the machines.
And if you're sitting there thinking this is just some white paper pipe dream, think again. Before the token launch, they spent 6 years building this stack under the names Polygon ID and Privato ID. They've already got over 2.3 million verified users. Their open-source tech is actively powering over 9,000 projects right now, including massive integrations with TikTok, HSBC, and Polygon. The adoption is already here.
Section 4. Price drivers and catalysts. The mechanics keeping BIL afloat.
So what actually poured gas on the fire for that 43% surge? A massive catalyst was Binance announcing the launch of BIL perpetual contracts with up to 20x leverage. If you know the markets, you know 20x leverage is absolute rocket fuel. Opening those floodgates drove a massive wave of fresh capital and wild speculative positioning straight into the asset.
Now, it's crucial to mention that BIL didn't just pump in a vacuum. Around May 9th, the whole macro environment shifted into a risk-on altcoin rotation. Everything was moving. Solana jumped 6.5%, Sui was up over 12%, and Ondo rallied 21%. Bill's massive 26.2% surge that day was essentially lifted by a rising tide of market-wide momentum.
But beyond the crazy high-leverage speculation, there's actually a fundamental mechanism designed to hold value. Holders earn power points for holding the token and participating in the network, which acts a lot like a staking yield. The whole goal is to create deflationary demand pressure, rewarding the folks who stick around long-term and absorbing some of the supply.
So, where do we go from here? Analysts over at CoinGabar laid out 4 potential scenarios for the next couple of years. On the bear side, a big airdrop dump could drag it down to the 2 to 4 cent range. But check out the extreme bull case. If they secure a Binance main spot listing and start landing heavy institutional identity contracts, analysts are projecting to climb toward 50 cents or even over $1 by 2027.
Section 5. Real risks for build traders. The warning signs in the data.
We have to be totally objective here, because there are some glaring red flags. First, extreme concentration. On-chain data shows the top 10 wallets control roughly 35% of the total token supply, which massively amplifies the risk of a pump and dump. There's also a weird lack of detailed public utility documentation on major sites like CoinGecko. And maybe the most critical, mark August 31st on your calendar. That's an airdrop claim date, and it practically guarantees a massive wall of sell pressure from early recipients taking profits.
And let's circle back to that crazy volume-to-market cap ratio. As the analysts at Yellow.com hit the nail on the head, sitting above 1.0 carries severely elevated risk. At 1.52, this asset's price action is heavily driven by short-term momentum. And history tells us that the second that momentum fades, those massive gains tend to reverse almost instantly.
The collision of cypherpunk privacy tech and high-stakes crypto trading is just incredible to watch. But honestly, beyond the leverage and the charts, this leaves us with one really profound question. As AI agents begin to inherit human trust and start executing major financial transactions on-chain, who truly governs the reputation layer of tomorrow's internet? Think about that as you watch this tech evolve. Thank you so much for joining me for this explainer, and I'll see you in the next one.